Hello, everybody. Welcome to Tuesday. The S&P 500 was down 0.9% today. As you know, over the last few weeks, we've been getting defensive, moving some of our stock market portions into treasury bill ETFs and inverse ETFs that go the opposite direction of the S&P 500. That's kind of paying off in this particular type of environment. We continue to kind of get into a more defensive mode, and I've presented why in the past. But one of the things that's really seems to be driving the market right now is this concept of what's called the inverted yield curve. So when you look at, say, a 10-year treasury, usually it pays more than a 2-year treasury or a 3-month treasury. For obvious reasons, you have to hold on to it for a lot longer. But once in a while, that gets inverted. So right now, the 2-year treasury is actually paying more than the 10-year treasury. So you can make more money in less period of time. And the reason that is because the bond market is looking forward and seeing weakness in the overall economy. And that's why you see this yield curve inversion often cited as something that is fairly accurate, actually, at predicting future recessions. The bond market's had a good track record with that. Now, the 3-month treasury is still paying less than the 10-year treasury, but it's getting closer and closer and closer, actually, pretty much on a daily basis. And that has an even more accurate predictive capability when the 3-month gets higher than the 10-year, which is kind of crazy when you really think about it. You can make more money on a 3-month treasury bill than you can with a 10-year. And so these are things that are, pre-indicators of possible recessions. They'll put a lot of pressure on the market because the market pays attention to this. It's got a very high accuracy rating. And so you'll see the market kind of selling off as people are expecting additional weakness in the economy that maybe isn't priced in. We saw, for example, Microsoft got a downgrade on its earnings, estimates from one of the analysts that's out there, and it had a big sell-off in Microsoft. And so I think that's the big next leg down, is just that the earnings estimates are still very high. I mentioned that yesterday, and they might start to come back down. And lo and behold, we saw that today just with this one company. So I think that's why we want to stay defensive, and that's why we want to be careful here and see where things are going to go. But tomorrow will be big because they're going to release the CPI number. The expectation was 9% for a lot of the things I saw, but today I did see a Bloomberg survey that said 8.8. Remember, it was 8.6%, last month. So maybe that comes in better and we get a surprise and the market jumps back up. But you can tell the last 2 days with the downturn that's been happening, there's definitely some concern about what might happen there. So really interesting. We'll see what happens tomorrow, and I'll tell you kind of what I think about the number and what they're focusing on and such too. So look forward to talking to you then. Thank you.